Do you have HECS or HELP debt? If so, you need to watch this video. Hi, I'm Marissa.
Kristin,
and we're from Rise High Financial Solutions. And today we're talking about HECS and HELP debt. And specifically, we're going to be exploring how having HECS or HELP debt actually impacts your borrowing capacity and what impacts it might have when you're trying to actually get finance to buy a home. So Kristin's my expert here today. We're from Rise High Financial Solutions. Let's get into today's topic, Kristin. Let's start with the basics. So firstly, what is HECS and HELP debt?
Right, so they're basically two terms that mean the same thing. Your HECS is your Higher Education Contribution Scheme, and it was basically established to help assist students with the cost of higher education. That was actually replaced in 2005 by the HELP scheme, so the Higher Education Loan Program, and that just basically involved a few other loan schemes that are available to students. So they're pretty much the same thing depending on when you did your tertiary education.
So it's basically borrowing money from the government to fund your university education.
Yeah, absolutely. And it's repaid through the tax system once your income hits a certain threshold. So what that means, it allows students to pursue higher education, a university degree, without having to fund the upfront costs. And that means that it eases the financial burden until you're earning an income and able to repay the debt.
Which in theory is really wonderful, that it's allowing students to access education without having to put the money up front.
Yeah.
And it's allowing them to pay them off at a point in their time in their life when they can actually afford to repay it off. But there are actually, people don't realise when they're actually going through university, but there is actually an interest rate that's applied, and they are actually paying for this debt as well. So let's just talk about, what actually happens with interest and how we actually know what interest we're actually paying on our HELP debt.
Yeah, look, it's a bit of a tricky one. It's not very straightforward. And there are some changes to watch out for that are potentially coming up in the upcoming budget next week. So keep an eye out for that. We'll discuss that in a minute. But currently, at the moment, the interest rate that you pay on your HELP debt is linked to the Consumer Price Index. So that's basically the cost of living or the inflation rate. And that index is adjusted annually on the 1st of June every year. And rather than calling it an interest rate, you'll hear people referring to it as an indexation rate.
So that means that for the longer that you have your HECS or HELP debt, the higher the debt will become.
Yeah, potentially.
If you're not actually making repayments.
Exactly.
Yeah.
So to give you an example, let's talk about John, who finished a university degree a couple of years ago and has a HELP debt of $10,000. So as at June 1st, 2023, the indexation rate was 7.1%. Ouch, that was pretty high. It was actually the highest that it has been in the last 32 years.
Yeah.
But what did that mean for John? So without him having made any contributions or any repayments to that debt, on the 1st of June, that debt would have increased by $710. So now he's got to repay a debt of $10,710.
So that's really interesting you say, because it's not called an interest rate as such, but the indexation that happens, the increase in debt is effectively paying interest, or your debt's actually growing at that rate. And like you said, because it's linked to CPI, that means it can change every year.
Yeah.
So it's not actually a flat rate or a consistent rate. Some years it will go up higher, some years it will be lower. So that can be a bit confusing for people that do have HECS and HELP debt to really understand what it is they're paying for that debt.
Yeah, absolutely. And because it varies year on year, it can often catch people out, I guess. Yeah.
So you mentioned before that there's some proposed changes, Kristin. Can you tell us about those?
Yeah, look, so earlier this month, the government announced that there are potential changes to reduce that indexation that it's applied to your HELP loan. So they're talking about capping that indexation rate of the lower of the consumer price index, so inflation, and the wage price index, which is basically wage growth. And this is due to potentially, if it gets through the budget, pass through Parliament, and then what they're looking to do is actually backdate that to June 2023. So it could save people, quite a bit of money.
And so just to clarify what that means for people, that means that people that do have a current HECS or HELP debt, if this legislation gets passed, then their debt actually could be reduced overnight.
Yeah, potentially.
That's pretty cool.
Fingers crossed.
So I guess we'll wait and see what happens there. But I guess the main moral of the story is, or the main thing to take away from this is that you are, the longer you have your HECS or HELP debt, the more you are paying, and there is a interest rate as such that's disguised as indexation. So it's really important that you understand that the HECS and HELP debt is not interest free.
Correct.
It is actually growing if you're not making repayments. And even if you are making repayments, it is still growing by the same rate. So let's talk about the repayments and how they work.
Sure. So repayments are basically managed through the Australian tax system, and they're based on your income. So you only start making repayments once your income reaches a compulsory payment threshold, which is adjusted every 12 months.
Yeah.
The threshold is set at a level to ensure people with a much lower income aren't disadvantaged and required to make repayments. So basically, as your income increases, the percentage of your income that you pay towards the debt increases as well. So the repayments are automatically deducted from your taxable income, usually by your employer, and they just reduce the amount that lands in your bank account every week. So you basically don't even see that money.
So you basically just get a reduction to your net pay that hits your bank account.
Yeah, exactly. Yeah. But it is important to remember that you can make voluntary repayments at any time towards your HECS debt, HELP debt, which will then reduce the overall debt, mean that you pay it off a little bit faster, and obviously keep that indexation at bay as well.
And so you mentioned that lower income earners don't necessarily have to pay the HECS-HELP repayments until they meet a certain threshold. What happens then as someone's career evolves and their income increases?
Yeah, so ultimately the higher your income, the higher the percentage that you're having to pay from your income towards that HELP debt.
Yeah, so that's really a bit sneaky that people don't realise. They're excited that they're getting a pay rise.
Yeah.
But actually more of their income is then having to go towards paying down the HECS and HELP debt. And I spoke to someone recently actually with HECS and HELP debt, and they had done a few degrees and done some post-grad study as well, and at the time didn't actually realise how much debt they were accumulating and how long it was going to take them to pay it off.
Yeah.
And there are many people in their 30s and their 40s that are still actually tackling HECS and HELP debt because they actually haven't really understood how it actually works. So it's really good that we're having this conversation today, and I hope that this does help people to understand what it's all about, how it works, so that you're aware of what you're going into. So where can people find information out about their HECS or HELP debt if they don't really know much about it?
Yeah, so to look up your own personal HELP debt, you go on the MyGov website into the ATO portal, and you should be able to find how much is outstanding in there. The ATO also sends out a statement every 12 months, which will give you an idea of that indexation rate as well. But you can also just contact the ATO on the phone and get some more information that way.
Yeah, and I think it is always a good idea to understand what debt that you have with any type of debt facility, but especially when you are wanting to get a loan, maybe you're wanting to buy a home or look at investing. It's really important that you understand this debt. So getting access to the loan balance that's outstanding is really important. So those are really great tips. So let's move ourselves to thinking about, okay, how does the HECS and HELP debt that we have actually impact our ability to buy a house?
Look, so HELP debt may impact your ability to borrow for a home loan, but it's not necessarily a barrier. So when you're assessing, when the lender's looking at assessing your eligibility for a loan, they consider lots of different factors. Yeah. They look at your deposit, your income, your expenses, your credit history, and your existing debt, so credit cards, car loans, but also your HELP debt comes into play. So look, it's very much personal circumstances, and there's no right way for one person versus another. It's very much a case-by-case basis when looking at purchasing a home and how your HELP debt impacts your ability to borrow.
And so let's just actually explore that a bit further. How does having a HELP debt or a HECS debt actually impact your borrowing capacity in reality?
So look, it really does depend on whether the strength of your personal financial situation lies with your deposit or the income that you have available to service the debt. So it really is a case-by-case basis. Having a HECS debt or a HELP debt increases your overall debt level and therefore reduces the amount of income that you've got left over at the end of each pay to service the home loan. So it is viewed differently from, say, a standard home loan because it's contingent upon your income. So as your income increases, your HECS increases, and also the fact that it's taken out of your pay before it even hits your bank account. It is looked at a little bit differently by the lenders compared to a standard loan. But look, the impact on your borrowing capacity really does vary on your personal financial situation. And I think it's definitely worth having a chat to a mortgage broker before you go ahead and repay it or make a lump sum towards your HECS debt, which would potentially come out of the deposit you've got for buying a house. So I think it's just the importance of having a conversation early on when you're going through that home buying process and understanding how it's going to impact you personally.
Yeah, that's a really good point because there really isn't a one-size-fits-all approach here. You know, a lot of people do have the question of, should I pay down my HECS and HELP debt sooner? Should I make lump sums? You know, what should I do with it? But yeah, you're right. You know, you really need to sit down with a mortgage broker who can really go through every little bit about your financial situation to work out what is actually going to be the best scenario for you to achieve all of your long-term goals.
Yeah, so I often will sit with a client and do those two calculations. If you took $20,000 out of your deposit to pay off your HECS versus if you kept your HECS and held on to that deposit, and it often comes up with two completely different figures in terms of your ability to borrow. So I wouldn't say to people rush out there and pay off your HECS debt as quickly as possible. It really does vary on a case-by-case basis.
So if you'd like to get some free service of actually going through some hypothetical scenarios for your situation to see how it would work, whether you paid off your HECS debt or kept it in play and wanting to sort of buy a home or an investment property, that is definitely a free service that we provide here at Rise High, and we'd love to help you. Thank you so much for tuning in, and we'll see you again next time. Bye.
Bye.